Hello and welcome to the Moneycontrol live broadcast. I'm Sonal Mehrotra Kapoor. We're talking on a very important day in middle of very interesting times. In this conversation over the next 30 minutes, we'll be trying to understand and decode what is currently the inflationary climate in India. Joining me in this conversation is going to be Dinesh. Dinesh, who's been decoding for us the entire inflation scenario for the past several chats that we've had. And Dinesh has become an in-house favorite and a go-to person now to try and understand कि चल क्या रहा है, okay? How to understand these numbers. At a time, Dinesh, we are speaking when never before since the monetary policy actually came into being in 2016 have we seen inflation numbers this high. Month of September numbers 7.41%. Never before have we seen US inflation as high as 8.2%. Never before have we seen rupee be so weak. And perhaps never before, at least our generation saw a pandemic like this, followed by a war, the one that we are seeing. So it's a very, very fascinating, interesting situation that we are all in. And at a time when just a few hours ago, we heard a very interesting speech come in by the RBI governor. A governor who's we've seen as very stoic, very clear, very to the point and factual based, actually got emotional talking about how RBI could not control the numbers. He's speaking about this just a day before the meeting is supposed to happen, and he's supposed to present to the government why we failed controlling our inflation numbers. So these are very interesting times. Some very interesting comments also have come out from there. But I just want to start by getting your first view, Dinesh, on understanding what was your key sort of takeaway. I have lots. I've made pointers of so many things that the governor really spoke about and so many
Yeah.
interesting stuff as well. But what were your key takeaways from what he said? And how did you take his justification on why we could not control the numbers?
Well, thank you for having me on this show, Sonal, and thank you for that nice and brilliant introduction. You have summarized it very well. We have been discussing it, of course, over the last few months. The scenario. Well, the key takeaway for me is that let me put it this way: no matter what words Shaktikanta Das uses to describe the current scenario, whichever way he puts it, one cannot ignore the fact that this is the most and biggest economic crisis Committee and the Reserve Bank of India ever since the new Monetary Policy Committee panel came into existence in 2016. The Reserve Bank of India's primary job is to take care of price stability in the country. To put it in a simple way, to guard the price stability while ensuring that growth is not getting hurt. So, one must understand that RBI has failed in its primary duty. So, what happens if you or me, is not able to do what we are supposed to do in the first place? That's exactly the scenario, the situation that Das and his team in RBI is facing. They can argue that they acted late in the interest of the economy because the growth had to brought back post-pandemic period to normalcy. They could have. He can say that early action on inflation would have hurt the economy, but the fact in front of us is that for the first time ever since MPC came into existence, for three consecutive quarters, inflation has stayed above 6%. So that desperation is very clearly reflective. It was reflective in the speech today. And I'm not really surprised with.
I think RBI failing in its primary duty, those are strong words, Dinesh, that you're using on what has happened today. Perhaps the reason why we saw the governor so defensive. I remember the time
Yes.
he finished with his speech and he said that I know my time is up, but you really need to understand a few things. He took a pause and then he said this would have costed us. So take us through the arguments that he's put forward on why this happened.
Yeah, exactly. So, of course, the speech was emotional, and Das was not in his actual self probably today while explaining the reasons of failure. Coming to the reasons that he has highlighted, and RBI will probably highlight in its letter, a formal letter to the government, there are three, four aspects. First thing is, just like I mentioned, RBI will say that an early action against high inflation post-pandemic could have hurt the economy. The recovery was very feeble, and if RBI hikes rates before the growth is brought back to normal levels post-pandemic, that could have put more pressure on economic recovery. That's the first point RBI thus highlighted in as many words in today's speech. Also, we must understand the other few points that might find place in the letter is that RBI will probably say that they acted 190 bps hike is not small by any means in half a year. They have hiked rates aggressively, and probably these hikes will show effect with a lag. That's the second point thus will probably say. And the other point is that the RBI will certainly highlight that the current inflation is triggered mostly by supply side factors rather than demand side factors. He will also say that global factors have played a critical role in pushing inflation high. So, as we have discussed in the past, if you remember in our chats, RBI has very limited tools to control inflation. It can only act on the demand side. RBI can increase rates, thereby hiking increasing the rate of interest, making money costly for the common man, thus cutting demand. But this helps only in a demand side if the inflation is triggered by demand, huge demand. The RBI will argue that this round of inflation is triggered by supply sides. The other fact is the global factors. The RBI has been, over the last few policies, has been highlighting that the Russia-Ukraine war has impacted the global landscape, as well as the commodity prices upswing. Also, the sharp weakening in rupee. The rupee is hitting record lows. So, when the rupee falls, that discourages importers to import more, because they will have to pay more rupees for every dollar, right? Now that the rupee has depreciated. So when that also has a bearing on inflation, because there is a shortage for goods because of less imports, which will in turn add to the inflationary pressure. So you have global factors playing out. You have a supply side inflation, not a demand side inflation. You have a Russia-Ukraine war. You have overall interest rates going up globally, as well as inflation, like you rightly mentioned in US. So all these factors thus touched upon these aspects in today's speech, and these are the reasons they will likely highlight in the letter as well when they write the letter to government by November 12th.
the letter the letter which has come into much debate on what will it have, why has that not been released, who will see it. He went on and spent about 5-7 minutes explaining to people on why this has not been made public. But just to give a
Yes.
context to our viewers also at this point, Dinesh, so the letter is essentially saying why RBI could not keep inflation under 6% for 3 consecutive quarters. That was the mandate, and why did not fall under that. And before anybody could ask, the government went on to say, I know the media is going to ask me why the letter has not been released, why we've not talked about it. But let me tell you that it is going to be discussed, and it is for the government, it is for the parliament to see, and they are in sync with what we are doing in this confidence building constantly that he was talking about. But at this point, I mean, frankly speaking, tomorrow is when the meeting starts, that correct? And that's when they will even sit down to frame the responses. The letter is not even ready in spirit yet. They just know the causes. They're going to sit down, and the panel is going to again sit down and form those things. And once the formal letter is ready, that's when it will go to the parliament.
Well, Sonal, as you rightly said, the meeting tomorrow is called under a specific section. I hope you can hear me.
I can. It's cracking up a bit, but we are picking it, Umesh. Go on.
Yes, yes, yes.
Yeah.
So let me give a brief introduction to November 3rd meeting that is happening tomorrow. It is not a normal MPC meeting that we generally see in every 2 months. The MPC meetings are generally held every 2 months to decide interest rates. But tomorrow, the meeting is called, if you have noticed, under section 45ZN, that was in the press release of the RBI. The section 45ZN refers to failure to meet inflation target. So tomorrow's meeting was never about interest rates. It's about to discuss the responses that needs to be shared with the government in a formal letter under section 45ZN. That's about it, and it's going to be a formal affair because I believe that the MPC and the RBI has already must have listed the reasons for failure. So tomorrow's meeting there will be first they will the MPC members will discuss the responses, reasons for failure, and they will suggest set of remedial actions. And thirdly, the time frame to bring inflation back to the normal level. So there are three parts to the likely to in the official letter. Of course, this is the first time we are seeing something like this. We haven't studied any such response. There is no precedent for any of this. But there are three parts to the letter. Will be this: one, the reasons for failure; the second, the remedial actions that can come from RBI and the government; and third, how long it will take to get inflation back to the desired level. So this formal letter, the rule is that once RBI formally fails the inflation target mandate, within 1 month, it needs to send the letter to the government. So if you see, October 12 was the day when they breached the inflation mandate. So within November 12th, that is 1 month, the MPC RBI has to send the official letter to the government. So today's controversy, I don't know whether we can call it a controversy. Das was sort of expecting queries about why this letter is not public. So apparently he was prepared to, give an answer. So what Das said is that under
Non-transparency,
law, as per law,
the non-transparency of the letter, as he kept referring to it throughout his throughout his speech, actually.
So yes, RBI has been making all efforts, all these, in recent years to make things more transparent in their communications. Including the MPC minutes, publishing the MPC minutes started as part of their transparency initiative. So obviously, doesn't really resonate well with that transparency approach. That's what Das was referring to. But the point is this: as per the law, the letter has to first reach the government before the RBI can make it public. So he has a point. Das has a valid point. But if you ask me, my public opinion, my personal opinion is that the public is the segment which who is hurt by the inflation the most. So they have every right to know why the country's central bank couldn't keep their mandate. Why couldn't they do a good job? So I hope that once government receives the formal letter from the MPC, it will be made public, because the general public, including you and me, has a right to know that what the RBI is explaining.
Right. And I think a lot of what the reasons are, and perhaps not the remedies so much, but what the reasons are were already addressed in his speech. He already spoke about the factors, global factors, and talking about how it would have costed economic growth. In fact, he took a pause and had a big gulp down and said it would have been very costly had we done that. So it's a choice that we took, and it was a hard one. And then he went on to say something very interesting. He's like, but now, moving forward at the stage we are at, he says he's going to have a Arjun's eye on inflation. And that is perhaps telling you that there's going to be a switch in the approach now, and that becomes controlling inflation becomes the primary job and target of the RBI, and that's what's going to really dictate terms and numbers moving forward.
Frankly speaking, Sonal, what else the governor could have said? They are in such an embarrassing point They can use all
Yeah.
sort of phrases and words. They can call it, we are now going to keep our, have an Arjuna's eye on the target. But the fact is that it has already happened, isn't it? I
Yeah.
can't remember a time, I can't remember a time in last 15, 20 years when RBI has increased the policy rates by close to 2 percentage point. They have done it
Hmm.
190 basis point in just 4 to 5 months. So
Hmm.
uh, obviously they have the eyes set on the inflation already. That is the reason they are
Hmm.
increasing the rates so rapidly, isn't it? So
Hmm.
I think that is just probably uh, representing the sentiment within the central bank, that, and also probably an
Hmm.
appeal to the public and the government that, okay, we have failed. I admit that. Now our entire
Hmm.
focus will be on inflation. But the reality is
Yeah.
that they are already doing it. Last 4 5 months,
Hmm.
the focus is only on inflation. That is the reason why we are seeing such back-to-back sharp rate hikes. Yeah.
Yeah, yeah. It's a tough job at the end of the day, considering what that's happening around the globe. In fact, talking about the globe, the numbers from Fed are expected later in the day today. And then there's
Yeah.
a meeting, India meeting on PC tomorrow. So lot is happening as we speak. And man, it's in a tough job. One must give him that. He's got a
Yeah,
tough job
but
ahead
there
of
are two
trying
ways
to.
to look at it, Sonal. There are two, sorry to interrupt you. There are two ways to look at it. There is a section of economists who strongly believe that RBI could have acted at least in small doses, rate hikes, a little earlier, so that the inflation uh, could have contained
Impact.
at a
Yeah,
more desired
yeah.
level. Yeah, because what they're doing now is sharp,
Hmm.
big rate hikes in such short span of time, which
Hmm.
means
Hmm.
that it can have an adverse effect on growth as well, isn't it? When
Hmm.
interest rates goes up sharply, uh,
Hmm.
because RBI is acting late in such a
Hmm.
short
Hmm.
span of time, that in fact kills the demand for even for the economic recovery. So that also
Correct.
can have an adverse effect on economic growth. So I don't think thus reasons for acting late will be accepted in its entirety by the economists, because they could
Hmm.
have acted. That is one opinion. They could have acted early so that
Hmm.
they didn't need to do this last minute, hurried
Hmm.
rate hikes in such a big quantum. So it's a matter of debate. But the
Hmm.
point is this: today's Das speech is not a surprise, at least to me, because
Hmm.
this is the biggest embarrassing moment for the RBI in so many years. And
Hmm.
Das will have to put up a brave face in front of public
Hmm.
to say that no, we were not
You're
wrong. We
right.
acted in the
It felt like that. It felt like that. It wasn't his regular speech. It wasn't his regular press conference
yeah.
about just the numbers. He was actually appealing to the people that, you know what, we tried our best. And this is still
Yes,
where we are. We promise that we'll do better. His whole
that's
speech
probably
sent,
going to be in the letter as well. Yeah, I think
yeah.
that's exactly what they're going to say to the government as also.
Yeah, but let me get to the next steps now, Dinesh, on what happens here. I'm just trying to foresee what role does the dynamics play, and how can this really go on moving forward. If the if what you're saying is some critics have been talking about how this could have been done earlier, done in small doses, so that the impact
Yeah.
was not felt so suddenly, and in such a short span of time. But if
Yeah.
his arguments, what happens in the scenario the government says, well, we are not happy with what you did? Is that a possibility? How do you think is the government going to respond to the whole letter and the response that goes from the governor and the team?
Well, that's an very important question, Sonal, and I do not have a clear answer to this because we haven't seen anything like this in the past. Okay,
Hmm.
so we know what are the likely content, what is the likely content of the letter, etc. But it's totally up to the government to decide
Hmm.
how will they respond to this letter, whether they will accept the RBI's reasons for
Hmm.
inflation failure, and
Hmm.
whether they will agree with the, like I said, the third part of the letter will be the time frame the RBI needs to
Hmm.
now submit to bring inflation back to the normal level. But the
Hmm.
government which is the primary authority, which is the biggest authority, has to agree with what is the proposal is. So,
Hmm.
uh, the RBI might suggest some fiscal actions as well in this letter to
Hmm.
bring back because of the reason what I mentioned earlier, that the inflation is triggered by supply side factors. So
Hmm.
the
Hmm.
RBI can ask the government to ease the supply constraints, at least for essential items like food and other, commodities, etc., so that the inflation is contained along with the supply side factors. How the government will respond to this
Hmm.
is something which we have to wait and see. We don't know yet. Yeah.
We don't know yet. So that's uncharted today. Nobody knows what can happen, will happen. So this is a very interesting space really to watch out for. Puts a lot of people under pressure as well. Look what's happening in UK, for example, on how prime minister after prime minister is failing to meet up with targets, meet up with numbers, and see where they are. Just as a last part of this chat, Dinesh, I want to understand what is your personal view on where you seeing inflation numbers go next. We've been reading of bits and pieces here and there on how over the next 6 months
Yeah.
you will see inflation numbers ease out a little bit. Is that something? Why will that happen? Is it only going to be sort of a reference point to the current scenario? By that I mean it's going to be a reference point to 7.4% at the moment, 7.2% at the moment? Or when you say easing out, what exactly does it mean and how long?
So my sense is that the CPI inflation, which is the retail inflation that we track for policy purpose in India, will come below the 6% mark by the first quarter, which is what the RBI has projected as well. Next 2 3 months, the inflation may not ease significantly. That is because of the base effect. The base effect which impacts, that is a statistical aspect. On a lower base last year, the inflation, the number will be higher this year. That is the base effect. Okay,
Hmm.
so base effect will play out next 2 3 months, and inflation may stay high for the near term. But by the first quarter of the next year, inflation is likely to come below 6% mark, which is the desired level set, under the 2 to 6% mandate. Now, there is a risk to this projection. The risk is that this will happen provided the global situation come conducive to this easing. If the global
Hmm.
situation, which is if suppose the Russia-Ukraine war escalates, or if the US Fed goes for an extra rate hike that than all of us expect, then
Hmm.
there are some upside risks to this projection that inflation will ease by first quarter. But right now, that is the expectation. Yes.
Okay. Okay. All right, then, Dinesh, we'll leave it there for the moment. Thank you so much. I still have so much more to ask, especially on what he said about CBDC, on how the rupee in its digital form is going to be rolled out for retail investors in the next 1 month alone. Perhaps we'll keep that for another chat. Also, what he said about rupee on the whole, on how they're controlling the numbers and all of it as well. As always, thank you very, very much for taking out the time and explaining it to us and all our viewers. Thanks so much, Dinesh.
Thank you. Thank you so much for your time. Thanks.
And to all our viewers, thank you so much for tuning in. If you have other bits that you want to understand about inflation, about economy, about personal finance, do send us your request. Tell us what exactly is puzzling your mind at the moment, and we'll do what we do best, bring you the best in the field to decode it for you, make you understand, make you more financially literate. Bye for now.